Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is February 7th, 2018, and today is Wednesday morning. So looking at the economic events of the day, we're starting out at 5:30 South African time. Weekly oil inventories coming out, and then later this evening at 10 p.m., New Zealand dollar rate decision. Okay, the Royal Bank of New Zealand will be making a rate decision this evening for those that are trading the New Zealand dollar. But lots of things are happening in the market, and let's take a look. So we're jumping straight into the Dow Jones, okay? Really, it's been the biggest play of the week for the past 5 sessions. Really, it's been the biggest play of the past 15 months, to tell you the truth. And I've been mentioning it in the daily review over and over and over again because I think it's just so historical, okay, what's been happening over the past 15 months. And, we've had a rally of over 40%. Okay, 8,000 to 9,000 points, depending on where your starting point is since Trump became president. Okay, and we rallied all the way up to 26,600-ish level. And now we finally took you call it a dive, call it a nosedive, call it, a debacle, but it's not, okay? And the reason I'm gonna make this argument this morning reviewing to show you how the correction of yesterday is just profit taking, both because most of the systems that are trading today are based on algorithmic, programs. So once something is triggered, it just gets exasperated into the program. So, that's why you have these massive drops, okay, after this massive rally. Now, if we look at this monthly chart, you'll see that the drop was actually much stronger, okay? It was a 3,000 point drop from last Friday. Okay, and we hit all the way down to 23,300-ish level. You could see the wick that came all the way down, and we're settling at 24,620. So we're really just off our highs of only 2,000 points, where we've rallied 9,000 points. So, take that into consideration. And this is why I'm, highlighting the fact on a monthly chart. And let's just get into a 4-hour chart to see where we're holding. Okay, so we're looking at a 4-hour chart. And as you can see, we've made this V formation, okay, on the downside, hitting all the way down to 23,100-ish level. And, for all intents and purposes, we can continue this rally, okay? Business sentiment in the US is still very strong. There's just inflationary concerns, which are something to be concerned about. But that's the Fed's job to really keep that in check, okay? And with the addition of the higher interest rates that are being implemented to the overnight charges for the banks, I think that is going to be put into check. And we're not going to get this, massive, going back into economic recession so quickly. I think that, we're still in an uptrend, and this is some really great buying opportunities for those that are acute investors in these type of situations. So we're trading at 24,600-ish level. Okay, so this is my one argument so far. First of all, inflation rates are in check. Second of all, interest rates are in check. Third is that the U.S. economy is still very strong. Now, if we jump into gold, okay, we'll see that gold is usually a haven for those that are looking to, for investors that are looking to deviate away from equities markets. And right here, gold is actually selling off, okay, from 1340-ish level to 1325. I would have expected it to bounce at 1380, somewhere along those lines, but it's not. It's showing that some relative weakness here in the price of gold, and we're breaking down on lower highs and lower lows, and this could formulate somewhat of a sell-off here, okay, because people are going to shrug off this thing that the equities markets are weak. So keep an eye on that as that resolves itself. Now I'm going to go jump into the euro right now. And as we see, the euro is actually breaking from this downwards trend line, okay, that we've had from 24.97-ish level down to 23.60-ish level, and we're breaking that. So I do expect a little bit of a bounce here. As you can see, we may see a catch up in the GBP USD, jumping it through the GBP USD right here at 139. I would like to see it above this 140-ish level as we continue trading here. As you see that we've, given up a lot from 142. So, I do expect a little bit of a bounce here for the GBP. Jumping into the Aussie dollar, you see that we're, solidifying here at 78. So we could see a correctional move on the upside as well as this resolve itself. Now looking and jumping at the oil is trading at $63.90. Okay, so we broke our support level, at 64.60, and we're now trading at 63.60-ish levels. So with that said, we're finding a new trading range to be formed. So if we do break this 63.25 later today, then you could expect it to sell off even further. So just keep an eye on this as the inventories number comes out as well. Now jumping into the DAX after seeing the Dow Jones, the DAX is also becoming very resilient, right? It's not breaking down below 12,000, bouncing hard from 12,200-ish level to 12,600-ish level. So we're only about 400 points from our 13,000-ish level. We're only down 1,000 points in the DAX altogether. With that said, the markets are still pretty strong. Okay, so I still see somewhat of a correctional move, or call it a profit taking, or somewhat of a just taking profits, and traders looking to recycle what they have in their portfolio. So this is really reminiscent of some of the trading that's been going on in the 90s and 80s, where we had this massive rallies on the upside and then correctional moves and everybody's scared. But as you can see, we're rallying right back. Okay, so keep that in mind as we continue trading this week. This is Fred Razak. I want to wish you guys a great trading day.